Good morning. This is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to break down what matters today ahead of the opening bell. In the pre-market, we're seeing modest weakness in major U.S. equity indices, with the S&P 500 down 0.3%, NASDAQ underperforming down 0.8%, and the Russell IWM also red down about 0.4%. Meanwhile, the VIX up about 3%, trading back above the 16 handle. The primary theme over the past month has been that of rotation, so we want to pay close attention to sector performance, both absolute and relative, with extra attention on technology, semis, and megs. Yesterday, we did see tech weakness closing down 1.1%, down about 2.5% at its worst, although megs outperformed, breaking out, closing up 2.3%. So on a net basis, more neutral than imbalanced. So XOK, semis, megs are going to determine that directional skew amid rotation. VIX also a key variable. We've talked a lot about the VIX and its levels. So levels here today, I would say largely unchanged. We got 15 on the downside, 15.5, 15.8, 16, 16.12. As of now, that is the pre-market high. We have the big 16.5 handle, which has gained a lot of attention, a point where vol sellers have been active over the past few trading sessions. We are coming up on, I would say, the fourth test of that 16.5 handle, potential for breakout into 17, 17.2. And then we got 17.5, 17.7, that daily downsloping trend line, which we mentioned a couple of days ago. We have 18, 18.65, 19, which is the big level, the pivot point, and a point where vol sellers have been active going back 4 or 5 months. So we want to pay close attention to the VIX, utilize those levels in tandem with our SPX levels. Now, in regards to SPX levels, largely unchanged. So we have a big zone overhead, 75, 75, 75, 80. And this has been a brick wall going back since mid-June. We have tested it once, twice, third time yesterday, and potential for the fourth test at some point. And as we know, the more times we test the level, the more prone it is to break. So we can break out of this zone. It opens the door to the big 7600 handle, which remains the call wall and ABS. We do still have some small gaps overhead. But the major resistance zone beyond 7600 is 7620, 7625, which is the all-time high zone. On the downside, now keep in mind, in order to see that breakout, we want to see broad sector performance. We need tech, we need megs to be outperforming. That was not the case yesterday, and our view was that upside was limited, and we really questioned upside beyond that 75-80 handle. So I don't know if we're going to see that today, given tech underperformance. We most certainly need to see a turnaround in order to get that breakout today. On the downside, flip levels, SPX flip, which is our main transitional level, 75.45, SPY flip, 75.54. Below that, previous session's low, 75.27. We got SPY put wall, 75.24. That is put wall and ABS. SPX put wall 75.20 and then 75.15. So actually a big negative gamma zone here, which is made up of a lot of short dated puts. A break would invoke more sell flows, potentially opening the door to the 7500 handle. Transitioning over to our dashboard, total gamma exposure for the SPX remains positive, 820 million notional, trading above our main transitional level of 75.45. Above, all strikes are positive, that is supportive for the market price. Below, all strikes are negative, that is destabilizing for the market price. Resistance, 75.80. Above that, 7600 call wall. On the downside, 75.20, 75.15 put wall zone. And this is in response to short dated puts being added yesterday. So if we go to the open interest change chart, we have about 15,000 new puts being added at the 20 strike. And about 14,000 at the 15 strike. So potential downside target and bounce point. A break will invoke more sell flows for a potential move into the big 7,500 strike going into option expiration on, well, tomorrow. And today would be the last trading day for those AM expired SPX options. In terms of the implied move, 0.9%, that is an implied high of 76.40 and an implied low of 75.04. In terms of the calendar today, retail sales due out at 8:30. And then, of course, geopolitics remain in focus. Not a lot of fear in the market with the VIX at 16, but of course, headline risk is high. And we've seen a lot of headlines over the past few trading sessions impacting the market price.